Hi, this is Rajesh Kumar from Arcane Infotech. In this video, we are going to see the overview of candlestick in stock market. What is candlestick in stock market? Candlestick is a type of financial chart used to represent the price movement of stocks, derivatives, currencies, or commodities over a specific period of time. Each candlestick is composed of four parts. The body, which represents the difference between the opening and closing price. If the body of the candlestick is green or white, it indicates that the closing price is higher than the opening price, and the candle is considered as bullish candle. Suppose if the body of the candlestick is red or black, that indicates the closing price is lower than the opening price, and the candle is considered as bearish candle. Second part is the shadow or wick, which represents the difference between the highest and lowest prices of the candle. Third point, the upper shadow, which shows the highest price of the candle. And last, fourth part, the lower shadow, which shows the lowest price of the candle. Use of candlestick. Candlestick charts are a valuable tool for stock market traders because they provide a clear and visually appealing representation of the price movement of one stock, help to identify trends, support and resistance level, provide potential buy and sell signals, and provide insight into market sentiment. In the next video, we are going to cover about the different types of candlestick patterns which will be useful to trade in intraday.